What's up, guys? This is your boy. This is my weekly SMC outlook on your DXY, EURUSD, USDCHF, and USDJPY. I'm going to break the market step by step for you to understand. So I am on the chart on DXY chart. So what we need to do is to go to the daily time frame. So we go to the daily time frame. You can see the market is what? On the daily time frame, market was bearish. Okay, the trend was bearish, and this was the last break of structure to the downside. If you can see clearly, this was the last break, and we have a change of character. After the last break, we have a change of character, and we have seen a pullback. Okay, it's over here where market is take. So it used this other block here. Okay, it used that other block over there, and it's pushing up. So what we are anticipating, we are waiting for it to take this high over here, to give us another BOS, telling us that we are now fully bullish. Okay, so here what we need to do is go to 4 hour time frame, because you will be looking for a what possible setup. So we need to come to 4 hour. If you come to 4 hour time frame, you can see that this was the last break over here. This was the last break over here, and you see the market gave us change of character over here, and this was the last BOS, and market change structure and give us a change of character over here. After that, it gave us another BOS over here, indicating that we are bullish. So the 4 hour and the daily time frame has aligned. On the daily, we are bullish, and also on the what? On the 4 hour time frame, we are also bullish. Okay. So if you also see the trend line that I have drawn over here, you can see that market has broken that trend line. So what we are waiting for it to retest. Okay. So and if you use our Fibonacci retracement, you can see if you measure from the low to the high, you can see that this is exactly our what optimal trade entry. I mean the fine trade entry where we want to see a change of character over the back. Okay, so on the 4 hour we are bullish. But before we get that pullback to this, we can counter the trend to this particular point of interest, this 4 hour point of interest. So if we want to counter that trend, we need to move to 1 hour time frame. And if you come to 1 hour time frame, you can see that this was our last break of structure to the upside, and we get a change of character over here. So now we are waiting for market to come here. If market come here, then we see the market structure shift over here on the lower time frame, like the 5 minute time frame or the 15 minute, we can sell to this particular level. But this trade is, I would say it's a risky trade. Okay, I would say it's a risky trade. So you wait for it to come to this particular level, this 4 hour VOS, sorry, this 4 hour point of interest, which has aligned with the daily time frame. So this is for it for the what DXY. So let's move to Euro USD. So Euro USD, let's go to the daily. So if you also come to the daily, you can see that this was the last break to the upside, and we get the change of character here. Okay, so we have seen the pullback. The market is now looking down. Okay, so we are waiting for it to take this was external liquidity, this external low. We are waiting for it to take this low so that we can get another BOS over here. But before that, let's go to 4 hours to see what is happening over there. Okay, if you come to 4 hours, you can see that this was the last BOS here, and we get this change of character. Okay, we get this change of character, and market, we are waiting for market to come to this POI. Okay, and this POI, I use the Fibonacci retracement to get that POI. You can measure from the low, sorry, from the high to the low. You can see that this is our optimal trade entry. Okay, where we are waiting to see a change of character over here to sell to the downside. Okay, we are waiting patiently for market to come to this particular PY so that we can sell the market. Because if you go to DXY, DXY is what? Bearish. Sorry, DXY is bullish. So the Euro USD also need to be bearish because they are correlated. If DXY is buying, Euro USD is selling, and if DXY is selling, Euro USD is buying. So if you want to counter the trend to this particular PY, you go to 1 hour. You see that this was the last BOS. Bear in mind that this is an internal BOS, and this is an internal change of character, not an external change of character. So this is internal. It is internal to the 4-hour time frame. So if you want to counter the trend to this particular PY, you can wait for market to come back to this particular PY, where this particular 1-hour PY, and you buy from there to this 4-hour PY. But this trade is risky. For you to be safe, wait for it to come to this particular PY, the 4-hour PY, so that you will look for a change of character over there and sell because the overall trend of Euro USD is what bearish. So taking any buy position is risky. So you need to align with the trend. Okay. So let's move to what? USDC CHF. This is USDCHF. Let's go to daily time frame. When you come to daily time frame, USDCHF is what? Bearish. If you see, it's bearish. It's bearish. But bear in mind that on this one, what do you call on DXY we are bullish. We are bullish on the dollar. The dollar is bullish. And if the dollar is bullish, and any pair, any 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 currency which is paired with the dollar will be if the dollar is the code or the base if the dollar is the base currency, the market need to be what? Buying. And if the dollar is the code currency, the market need to be selling. So on US our USDCHF, you can see very clearly, you can see that we are on a downtrend. So if you move to 4 hour, let's move to 4 hour. You can see that this was our last break of structure and market reacted on the other block, right? And we are waiting for market to break here, break this previous low so that we can get 4-hour BOI. But before that, we can move to 1 hour to trade or to take a trade from there to this place. Okay, maybe if you miss this particular trade over here, you can still look for entry around this region and sell it to this particular low. So let's go to 1 hour. Okay, if you come to 1 hour, you can see market was bullish around this place, and we saw a change of character here, and we get another BOS over here. So we are waiting for a pullback, right? We are waiting for a pullback to this particular level, and market might ignore this PY and use the other block over here. But if you see a change of character here, you can sell or around this particular level because there is an imbalance over here. But because how I was able to get this PY was I used this in the C level, okay, to get that refined PY. If you can see, this is our PY. But market might move a little bit below here, which is still valid, and clear all this liquidity over here, everything over here. But if I get a change of character inside this PY, I will sell the market to the downside. So let's go to USDJPY. We move to USDJPY. Let's go to the daily. You can see on the daily we are bullish. Okay, we are bullish. So let's go to 4 hour. 4 hour time frame. If you can see on the 4 hour, bear in mind that on the daily we are bullish. But on the 4 hour, we have seen a change of character over here. And this is the PY. And market is currently at the PY. So here what we need to do is move to the lower time frame and look for a change of character so that we can sell to this level. So let's go. But on the daily, this it might be a minor sell. You might target this low over here. On the extreme, a little bit but on the daily, we are bullish on the daily, but on the 4 hour, we have seen a change of character over here. Okay, so let's go to 15 minutes. So we are on the 15 minutes. If you can see, on the 15 minutes, this was the BOS, and this is the change of character. We were supposed to enter here. You can see here. So we were supposed to enter over there. We were supposed to enter there and target this low, that low. But if you miss that trade, we can still wait for it might come over here because we have what an imbalance over here. So market might come back to this particular level. Let's use our feet to trade. So you can see this is our optimum trade entry. So market might pull back over here, over to this place. Market might pull back so that we can get an entry over here. So that's how